Okay, good morning, everyone. Thank you so much for joining us today for our first ever virtual home empowerment workshop. We will be learning today about how to buy a home from two of our great partners, SUMMECH and the Atlanta Land Trust. My name is Jennifer Tremin, and I am the program manager for the Atlanta BeltLine Partnership. We are the nonprofit entity for the Atlanta BeltLine, and through our home empowerment initiative, sponsored by Bank of America and Wells Fargo, we partner with best-of-class organizations to provide BeltLine communities with resources to help them feel more secure in their homes and in their neighborhoods. And this is particularly important as the BeltLine starts coming through new neighborhoods and adds increased pressures to both residents, homeowners, and renters. So today we'll be learning about different home buying options from SUMMECH and the Atlanta Land Trust. Before I ask them to get started, just a few housekeeping rules. Please keep yourselves muted for the entire session. If you have a question, there will be different opportunities for you to ask that for both presenters. Please use the chat box. Should be to the right of your screen or the top if you're doing full screen mode. We will answer as many questions as we can throughout the session. If your question wasn't answered or you're having any technology difficulties, we will be sending an email out at the end of the session, and we can connect you with the presenters or answer any questions then. We'll also be sending out a survey at the end, so please make sure you fill that out so we can keep our programs serving you the best it can. And without further ado, I will turn it over to Felicia Hicks with SUMMECH to get started.
I'm sorry. Good morning. My name is Felicia Hicks, and I'm with SUMMECH Community Development Corporation. I am a program manager here. SUMMECH is an award-winning nonprofit 501c3 community development corporation with over 30 years of experience providing quality, affordable housing for low to moderate income individuals and families. To date, we've developed over 14 housing units completed independently in partnership with for-profit developers. We are also a HUD-approved counseling agency, and as a HUD-approved counseling agency, we have educated over 3,000 individuals in homebuyer education. We offer affordable housing, homebuyer education, workshops and classes, pre- and post-purchase counseling, credit counseling, and financial literacy training for youth and adults. Today, we're going to discuss renting versus buying, how your credit affects you, the home buying process, loan application process, and some resources that can aid you in this process. And then at the end of both presentations, we'll be available for questions. I told you a little bit about SUMMECH. Our mission is on the screen before you. It's to serve as a leader in community development initiatives that build economically sustainable neighborhoods in Mechanicsville and the state of Georgia. What you see before you is our home buyers flow chart to success. As a HUD-approved comprehensive housing counseling agency, we provide all types of counseling. Most people, our first introduction into our program is through our first-time home buyer education group workshop. And this is a typical flow chart and entry into our services. Currently, all of our services are free with the exception of our online homebuyer workshop, which is currently $99. What we are not is a lender. We do not qualify you for funding, but we do help you get ready for your mortgage loan application by addressing any credit concerns or budgeting concerns that you may have, any barriers that may be impeding your success to becoming a homeowner. Our first topic is renting versus buying. You have made the decision to encounter get some information about the process. The first thing is comparing where you are now and what your goal is. So renting versus buying. When we make any decision, it's necessary for us to weigh out the advantages and disadvantages. So what we have, the advantages of renting, you currently have a short-term commitment, typically a 1-year lease, low maintenance, no responsibilities for repairs. The disadvantages of renting, of course, is no tax benefits, potential rent increases at every lease renewal, and no equity is accumulated. Advantages of buying and disadvantages of buying. I'm going to start with the advantages. Tax advantages. When you're owning a home or purchasing a home, you could potentially qualify for tax advantages. Stability. You now have increased stability, knowing that you have a longer commitment to your housing. Equity is also an advantage of equity. Equity is the difference between the value of your property and the amount of money that you will owe on your loan. In the most ideal situation, your equity will increase over time. Then you also have the pride of ownership. But as I said earlier, it's necessary to consider both sides of the coin. So a disadvantage is associated with buying. It's upfront costs. Sometimes people are intimidated by the upfront cost that is necessary to get involved in a home purchase, which we'll talk about a little later. Then you have maintenance and repairs. You, as the homeowner, become responsible for the maintenance and upkeep of your home. You no longer have the luxury of picking up the phone and calling the landlord and requesting these repairs. Monthly costs. You may see an increase in monthly costs and responsibilities in regards to maintaining your home. And the last one is decreased mobility. This is a longer commitment. You just can't up and move. Before you do so, you have to either sell your home or make the important decision of if you want to be a landlord or not. Next, we're going to talk about how does credit affect you in this process. Credit is very important in this process. You must demonstrate a history of paying monthly payments on time. It indicates you're likely to make your mortgage payments on time. A history of not overborrowing or on revolving accounts indicates you are good at managing your credit that is extended to you. A credit history that is free of derogatory events such as bankruptcies and collections indicates responsible handling of debt. Credit is a trust given to another person for future payment of a loan on credit cards or etc. We all are familiar now that a lot of things are credit score driven, and a mortgage is no different. A credit score is a number that summarizes your credit risk based on a snapshot of your credit report at a particular point in time. This was created by FICO, the Fair Isaac Corporation. It gives lenders a fast, objective estimate of your credit risk. It indicates the likelihood of a borrower going late on a future loan. What you have before you are the top 5 categories that make up the FICO scoring system. As you can see, the top 2 categories is 65% of your score. Simply by paying your bills on time and reducing your debt is one way that you can improve your credit. The average credit is between 620 and 680. On the right side of that slide, you see important FICO milestones. These are different milestones that are important in the mortgage loan industry. When you're dealing with your credit, you have types of trades. Those will be revolving, which is what a credit card would be, auto loans, student loans, or installments. So that's what makes up the types of trades. And then you have your inquiries. This is where you give people permission or creditors permission to view your credit file. Your FICO score is a part of the mortgage information that would dictate whether or not your application is approved. It also has a determining factor on the interest rate that you qualify for. It is very important when you're starting this process that you perform your own credit check. We encourage you to look at your credit and view your credit before meeting with the lender. We recommend that you use annualcreditreport.com because you can obtain one free credit report a year from each of the 3 reporting agencies. You want to take advantage of this because you will know where you stand. You'll have a starting point if you need to improve your score. And most credit reports contain mistakes, and you will want to address those or correct those before moving forward. Your FICO score is based on a combination of these credit reports. And some do's and don'ts in regards to your credit. You want to correct inaccurate information, stay current on existing accounts, join a credit watch program, something like Credit Karma, or it's many others out there, but I encourage you to do a free one. I wouldn't encourage you to incur an additional fee for these services. Pay off or pay down debt, resolve any unpaid debt, and be patient. Some don'ts in regards to your credit. While you're embarking on this process, don't apply for new credit. Don't max out or overcharge credit cards. The general rule is to stay at or below 30% of your high credit limit. Don't close credit card accounts. Most people, after they pay off their card, they close their account. The payment history is necessary in your FICO scoring, as we saw on the previous slide. So you do not want to close your accounts. Next, we're going to talk about the steps in the home buying process. Typically, SUMMECH goes deeper into each one of these steps in our 8-hour class. Of course, we don't have that time allotted today, so we're going to give you the steps in the home buying process, and then we're going to talk about 2 of the major ones. So of course, you see here, it's recommended that you attend home buyer education. This is to just give you some advanced knowledge into the process so that you can be aware of the steps necessary to get to your end goal. Most lenders and down payment assistance programs are now requiring buyers to attend home buyer education. The next step is to determine your affordability. This is where you determine how much you can comfortably afford to pay for a monthly mortgage every month. The third step is getting pre-approved, which is a very important step. It helps throughout the process. Most realtors require you to know what your buying power is before they commit to taking you out to shop for a home. Then you also want to determine your house needs. What do you need as an individual or a family? Location, house type, those things are things that you want to consider when you're determining your house needs. Then you want to shop for a home with a realtor. A realtor is a real estate agent that is also a member of a national association of realtors. Then you want to make an offer on a home. Once you're doing that process, you will get an inspection from a professional inspector. This process is also very important. Then, after your offer has been accepted, you will begin to finalize your loan. During this process, we will talk about a little later, you will have some additional verification documents that are needed to be supplied by you to move forward to the final stage. Then you want to get insured. You have to get insurance to protect your investment of your new home. And lastly, then you will close. This is like graduation day. This is the day that all of your hard work comes to fruition. We're going to further delve into how much you can afford, which is determine your affordability, which is very important. How much can you afford? This is determined by two factors, income and debt ratio. The ratios that most banks use for their programs can vary. However, it is a standard in the industry, and this is public information that you can request from your lender. But a ratio indicates the proportion of a debt a person has relative to his assets. For this slide, for this presentation, we're using 33 and 38 debt ratios. These numbers can vary. That first number, 33, can go as low as 28, and the back number in some programs can be as high as 41. We use these numbers as educators because it's a very safe area to be in regards to computing your affordability. What do you do next? You calculate your maximum house payment, which is the front, using the front number, which is the housing ratio. You take your gross monthly income times 33%, or whatever loan program you're considering, you would substitute that ratio there and get your maximum house payment. This 726 represents the building, is how I like to put it. It's the building. That's for principal, interest, taxes, insurance, mortgage insurance, and HOA fees if you should buy into a condo or a homeowners association. This does not take into account any utilities or anything like that. It's just the building. So once you compute that number, you next move on to computing your maximum debt payment, which you use your gross monthly income again times the debt ratio. Remember, this number will be provided by your lender, but you can always use these numbers as a safe base to get you started. Now, the maximum debt payment of $836 includes your house payment, because your house payment is now a debt. It will be a debt. Your mortgage will be included in this. So this is the maximum percentage of a borrower's income that can be used for the monthly house payment plus all creditor debt. What is creditor debt? This is debt that is listed on your credit report that you are responsible for paying each month. Let's take a look at that. This is a current debt load for this fictitious person. We have a couple of credit cards, a car loan, and a student loan. These are the debts that they're currently paying every month according to their credit report. Now, you may have some additional debt that you pay that may not be reflected on your credit report. So if that is the case, you will also add those so you can determine your true affordability. So this person's maximum debt load is $325. Our second calculation was $836, which was the maximum debt payment. You take your current debt load from your maximum debt payment, and now you have $511. The $511 represents the true maximum house payment that a person making $2,200 a month can afford to make based on this debt. If they had no debt, then there will be no subtraction of a current debt load. That's why it's always encouraged to reduce your debt before going into home ownership. I also want to point out in this calculation, you may have noticed that we use gross monthly income. That is a disparity because we live off our net, but lenders use your gross monthly income to qualify you. So as you can see, when you go into a mortgage loan, you're already going in from a different number. So to really determine how much you can afford, I suggest with my clients that they factor this based on your net income. Yes, it would yield a smaller amount, but it will be your true affordability. So when doing this, I would encourage you to use your net monthly income to get to your true affordability. So based on this maximum house payment that you can afford, or this person can afford at 511, this is a little under $100,000 price point. What you see before you is an example of a FHA government insured loan program with a 30-year fixed rate loan with a interest rate of 5.4%. Now your interest rate, of course, varies with the market as well as your credit standing. Most FHA loans, you put down 3 to 5%. Of course, you can put down more if you have it available or desirous of doing so. However, when you put down less than 5% towards a mortgage, then you're facing mortgage insurance premium, which you see at the 1.75%. So the total loan amount for this example is $171,830. On the right side, you see the principal and interest and an estimation of taxes and insurance, as well as the mortgage insurance premium. The estimated costs are also factored for you at the bottom. Lenders use your debt to income ratio to determine what loan amount for which you may qualify, but it's important that you know as the individual what your affordability is, because this is a sales transaction. So you want to make sure that you're in a position to comfortably pay your mortgage every month. So although that you may get qualified for, say, $250,000, that doesn't mean that you have to maximize at that qualified amount. You individually, with you or your families, would determine what your affordability is. Next, we will talk about costs associated with purchasing a home. So you have your upfront costs. That's down payment, earnest money, closing costs, cash reserves, and home inspection. Down payment can range anywhere from, like I said, if you do an FHA, from 3.5% upwards, depending on the availability of funds. The comforting thing about that, there are now down payment assistance programs that you may be considered for. Then you have earnest money. Earnest money is what is submitted when you make an offer to show the seller your seriousness of moving forward with the transaction. Then you have, the typical earnest money range anywhere from $500 to upwards of $1,000. It depends on the sales price of the home. Typically, anything $100,000 or less is $1,000. $100,000 or more, you will see that increase. The closing cost is typically a shared expense between you and the seller, and it can range anywhere from 3 to 6% of the purchase price. A highly motivated seller may decide to pay all of the closing costs. Also, down payment assistance programs can be used to cover your share of the closing costs. Cash reserves is your anticipated mortgage payment. Lenders like to see anywhere from 1 to 3 months of your anticipated mortgage payment available in your savings or checking account. Home inspections, which we talked about in the steps in the process, is a very important step. Home inspections are based on the square footage of the home, but they can range in prices from $250 to $500. If you're doing a new construction, you have multiple levels of home inspection, so the price will vary. I also encourage people to set aside at least enough to pay for at least 2 home inspections. excuse me, because if you make an offer on a home and you can conduct a home inspection and you find some major defects that you're not willing to accept, you want to have the availability of funds to complete a home inspection on your next offer. If you're only have to do one home inspection, you can move those funds to another cost. After you're under contract, then you start considering your settling in costs, moving expenses. Are you going to use professionals or family? It's still costs associated with both. Because if you're using your family, I would highly encourage you to budget to feed them. Next, you're going to have your utilities. You want to investigate and research what the startup costs for connecting your utilities at your new home. Then you have minor repairs associated with transitioning. First thing I would recommend is definitely changing your locks. So you want to budget for that. Installing an alarm system, making sure you have window coverings to to all of your windows. Those type of things are important. And once you closed and you moved in, your ongoing costs would be, of course, your mortgage payment. You definitely will want to make this your top priority. Then you have your homeowners association fee, if you have one, your utilities and maintenance. You definitely want to include maintenance as a part of your new budget because this is now your responsibility. What does a house payment include? Your house payment will include principal, interest, taxes, and insurance. You will make one payment a month that will go towards your principal and your interest, and the bank will establish an escrow fund for you to pay your annual tax bill and your annual insurance bill. What is not included in this fee is your homeowners association, if you have one. That would be a separate payment that you're responsible for making. Next, we're going to talk about the loan application process. As I indicated earlier, it's very important for you to complete the mortgage pre-approval process. You have, through your education, learned how to determine your affordability internally. Now you are prepared to go external and apply for pre-approval with the lender. When you apply for pre-approval with the lender, you will see some documents that is necessary to complete that approval. Once you submit the application, they will give you a approval amount, and it has conditions based on the house that you attach to the loan, as well as further verification of the information that you have provided. But the pre-approval also confirms what your buying power is and help you be more deliberate and direct in your house hunting and when you're making an offer. Remember, we said you're going to do this with the assistance of a realtor. And what your realtor would be a buyer's agent. That would be a buyer's representative that is representing you in the transaction. Most homes on the open market are represented by a listing agent, which represents the seller. You want to make sure that you have a buyer's agent that is representing and protecting your interest in the deal. So once you have an accepted offer, you've completed your home inspection process, and you're moving forward with the purchase, you're going to move into the part where you're finalizing the loan application. That's where additional documentation will be needed. The purchase and sales contract confirming that your offer has been accepted, and additional documents. This will be an ongoing process. You will be providing your bank statements on an ongoing basis until you close. They will be verifying that you still have the income that you stated up until closing. And then you will go into what is called underwriting. They will review your application. They will review the purchase price of the home and confirm the value of the home by completing an appraisal. During that process, when you're in underwriting, you can come out with a green thumb yes, or a yes with conditions, or a no. But most loan officers that prepare you for mortgage underwriting will work hard to ensure you come out with the yes. What can some conditions be when you come out of mortgage underwriting? It could be increase your reserve. You only have 1 month saved or of your anticipated mortgage payment, and they may be desirous of you having 3. Or reduce your debt. They may suggest that you pay off some additional credit cards and things like that. They will make those recommendations to you during that time. And then you will proceed after those conditions are met, if you have any, you will move forward to loan closing. This is where the transfer of the property takes place and the debt is secured by the home purchase, and you move forward to transitioning into home ownership. This whole process takes anywhere from a minimum we typically say anywhere from 30 to 60 days, depending on your situation or how long it takes you to find a home. But being proactive and knowing where you are in regards to your credit and having these documents readily available aids in that processing. Then you want to, during this process, you're determining what is the right loan for you. It's different type of loans that are available, and you and your lender or your loan officer can determine what's the best type of loan for you. So you have government loans. These are loans that are backed by the federal and state agency. They have more flexible credit guidelines, and they also allow for smaller down payments. That will be your FHA and, of course, your VA. Then you have conventional loans. Those are loans that are not backed by the government. They require a larger down payment and typically are used for both first-time home buyers, but also can be used for move-up home buyers that are now upsizing to a larger home. Each home loan category offers a range of financing options. And again, this is something that you would discuss in detail with your loan officer. You will work together with your mortgage specialist to select a program and a loan that best suits your budget and your financial goals. And again, we reiterate that down payment assistance is available for those who qualify. What do lenders look for? They look for what is called the 4 C's of lending. You have your capital, capacity, character, and collateral. Capital. Do you have enough cash for down payment and closing costs? Do you have enough for emergencies? Of course, we mentioned that down payment assistance can be used for this, but you do have to have some skin in the game, meaning your own funds. Capacity. Does your income demonstrate that you can repay the debt? Your credit history is your character. Will you repay the debt? And collateral is the house. This is where your appraisal come into play. Will the lender be fully protected if you fail to repay the loan? That's the value of the home that they're investing this loan in. And then you have your home buying team. These are members that will aid you in getting to your goal. Your real estate agent, which I encourage you to choose a realtor that has went the extra mile and it became a member of a national association of realtors. And this is someone who must abide by a stronger set of ethical standards. That's what sets them apart from just a real estate agent. You would want to look for a realtor. How do you find an agent? You can do word of mouth because most people are going to be very honest about their situation. Down payment assistance teams, home buyer education, referrals, provide referrals as well. Your lender, most down payment assistance programs has a list of approved lenders that you can choose from. So you can start there You can also go for referrals. The closing attorney is usually selected by the lender or the seller. No cause for alarm in that situation. You choose your inspector. You want to make sure you have a licensed inspector. Appraiser is chosen by your lender. You incur this cost for the appraisal. It's a part of your upfront cost in the loan application, but the lender makes that selection. You select your insurance agent and your housing counselor whom you will receive home buyer education from. Lastly, is your resources that are available to you. When you're looking for a home buyer educator, we encourage you to seek a HUD approved counseling agency. We have adopted a code of ethics and a national standard in presenting this information to you. So when looking for HUD approved counseling agencies, you can visit their website. Vesta Atlanta Housing, and Georgia Department of Community Affairs are all down payment assistance providers that are available for resources that you can further look into when ready. And lastly, you can get to the point where you can kiss your landlord goodbye. SUMMECH Community Development Corporation is a full service housing counseling HUD approved agency, and we welcome to aid you in your process. You can view our website, and if you desirous of one-on-one counseling or additional information, feel free to email us at info@summechcdc.org. Thank you, and I'm going to turn it back over to Jennifer so she can pass it along, and we will answer questions at the end of the second presentation.
Great. Thank you so much, Felicia, for all that great information. Again, does anyone have any questions? Please add them to the chat box for Felicia, or we can give you her information afterwards if you want to get into their programs. I'll give just a few minutes, and then Amanda, if you want to get ready to start sharing yours while we wait for questions. Alrighty, Amanda, I will unmute you, and we will get started with yours.
Amanda Ryan. I am the Executive Director of the Atlanta Land Trust. On the line today with me is also Karen Babineau, who is our Stewardship Manager at the Atlanta Land Trust. I'm going to be doing most of the talking today, but she will be participating and available to answer any questions you have. And then if you do decide that you're interested in moving forward with buying a home through the Atlanta Land Trust, she will be your primary point of contact and will help usher you through that process. Here we are. So Felicia gave a great presentation on buying versus renting, and what the advantages and disadvantages of each are. So if you get to the point where you decide that you do want to move forward with buying a home, a community land trust home is one potential option that we would love for you to consider. So for the presentation today, we're going to provide you with an overview of our organization, the Atlanta Land Trust, and more broadly, the community land trust model that we employ at the Atlanta Land Trust. We'll talk about buying a home through the Atlanta Land Trust, what that process looks like. We'll review our geographic area of focus within the city of Atlanta and some of the properties that we currently have available for purchase. We'll talk about our financial education requirements in order to buy a property with us. And then we'll review some of the resources for financing your purchase of an Atlanta Land Trust home. And then we'll leave time at the end for questions. So the Atlanta Land Trust is a nonprofit organization, that works to deliver and steward permanently affordable housing within the city of Atlanta, but really with the geographic focus on the Atlanta BeltLine corridor. And our vision is to be the primary community land trust in the city of Atlanta and one of the largest urban community land trusts in the country. So what is a community land trust? A community land trust is a nonprofit organization that is a community-driven organization, has community representatives on the board of directors. It acquires land for the benefit of the community and holds that land in trust permanently. A community land trust can develop different uses on the land that they control depending on what the needs of the community are. But most community land trusts do focus on affordable housing. And there are over 225 community land trusts across the country. They have been in operation in our country for about 50 years now, so this is not a new tool. This is something that has been around for a very long time and is well utilized and well tested.
Hey, so this is Rob Bronner. I'm the executive director of the Atlanta BeltLine Partnership, but I also serve on the Atlanta Land Trust Board of Directors. So I apologize that we're having, it sounds like, some technical difficulties with Amanda and Karen's connection. So Amanda and Karen, if either of you are able to get back in, please cut me off. But I will try to convey as much as I can. So for how a community land trust works, as you can see here, basically there are a variety of topics or a variety of funding sources that can be used to acquire homes. The real key to a community land trust is the ownership of the land, and essentially taking the land out of the purchase price of the cost of the home to the home buyer. You would go through the income qualifications that you heard talked about already in the SUMMECH process, but there would essentially be a lease fee that's a relatively small amount that would be paid to lease the land from the community land trust. And really importantly, particularly compared to a rental situation, because you do own the home, in the same way that SUMMECH was talking about building equity within your home, you do continue to build equity within a community land trust home, even though the land itself is owned by the nonprofit organization, the Atlanta Land Trust. In that ground lease, and I see Amanda's hopefully going to be able to get back on here, but in that ground lease, there is a formula that basically sets the price at which you would be able to sell the home. And the real intent there is that this is a tool for permanent affordability. And so just as you as a current homeowner, if you are below a certain level of income, you would be able to buy a home in a neighborhood that perhaps you may not otherwise be able to afford. When the time does come to sell, you would also be selling to somebody who is a income qualified, perhaps lower income resident, and it would be at a price that is affordable to them, but you would still build equity in that home. The good news, as you can see kind of in the bottom right, is this is really a great step between rental and kind of full market home ownership, where you own both the land and the home, and that it allows you to start building equity, which you're not able to do when you're renting, but being able to purchase the home at a lower price point than you may otherwise be able to find a home in that same area. But then when it comes time to sell, you pass on that benefit to the next individual. But because you have built equity, you would now have more money for a down payment and some of those other costs that SUMMECH had spoken about, so that you could afford a full market home where you own both the land and the home.
Great, Rob. Thank you so much for stepping in. I think Amanda may have rejoined us, and I think she is off mute.
Okay, can you hear me now?
Yes.
My screen share is working. Okay, great.
Yes.
All right, I apologize for that technical difficulty. And Rob, you did an excellent job. I heard everything you said. So you set up the presentation well. So I'm going to move forward. We did have a connection here on this slide to a video that provides an overview of the community land trust model. I'm going to skip it just because we're having technical difficulties and Rob did such a great job of explaining how it works. But this is a great 2-minute video that's available on the homepage of our website. If you do want to review it, it provides a really concise explanation of how the model works. And it's a great way to share that information with maybe somebody in your family that you'd like to learn about the community land trust model, or share with your neighbors or your friends. It's a really great primer on how it works. So we wanted to spend some time talking about the benefits of community land trust homeownership. So big picture, it mitigates the risks of traditional homeownership, strengthens residential stability, and promotes equitable wealth building. So the benefits of community land trust homeownership are very similar to what Felicia reviewed that you would get as a typical homeowner, but there are some differences in the model and how it's structured. So I want to make sure that we touch on those today so that you will understand how this is different than traditional homeownership. First, as I mentioned earlier in the presentation, the goal of a community land trust is to take land out of the speculative real estate market and put it into community control so that the community can determine the best uses for the land based on the needs of that specific community. And as I mentioned, community land trusts primarily do affordable housing, but they also have the ability to do affordable commercial space for locally owned businesses or nonprofits. They can do community amenities or green space or even agriculture. There's a wide range of different land uses that a community land trust can implement on the land, but the goal really is to put that land into the control of the community so the community can determine how the land is used based on what their unique needs are. Community land trust homeownership, just like traditional homeownership, provides great housing stability. Nationally, the annual move rate for a community land trust household is 2.6% compared to 14% for all households. Community land trust homeowners also benefit from predictable and consistent monthly housing costs. So you get stability from the fact that you own your home and you're not subject to the whims of a landlord. You also get stability from the fact that you have a predictable monthly housing cost and that you're not subject to a landlord who could increase your rent with very little notice. Community land trust homeownership does provide a pathway to traditional homeownership. So as Rob discussed, the community land trust ownership model is what we call a dual ownership model. The community land trust retains ownership of the land, and you, the homeowner, own the improvement on the land or the house. We recognize that this model isn't a good fit for everybody, and that many people, in fact, aspire to traditional homeownership where they own the land, they own the house, and they get the full benefit from the equity of that type of ownership. We can, for a lot of people who work with us right now, they are first-time homeowners, and they are renting. They've been renting their whole lives, and they do aspire to traditional homeownership, but the gap between renting today and becoming a homeowner is just too wide for them to bridge on their own. So community land trust homeownership, for those folks, can provide a stepping stone. So we can help get you from renting today to traditional homeownership if that's what you aspire to. On the other hand, if you're comfortable with this ownership model, you are welcome to stay in your community land trust home for your whole life, and you're also able to pass it down to your heirs, just as you would a traditional house. Wealth creation, Felicia did touch on this. Homeownership is a great way to build equity and wealth. Community land trust homeownership provides a limited opportunity for wealth creation, but we did see nationally that your average shared equity household, which is another term for community land trust, accumulated approximately $14,000 through an initial investment of roughly $1,800. So that's an amazing return on that initial investment. Through community land trust homeownership, you can expect to realize some equity, but as Rob stated, it is limited based on the resale formula that we have in our ground lease, which we will review in some detail. Facts about community land trust homeownership. CLT home is governed by a long-term ground lease and a special warranty deed on the improvement. So when you buy your community land trust home, you are getting the deed for the improvements, and the Atlanta Land Trust is keeping the deed for the land. And when you close on your home, you're also going to be signing a long-term ground lease. The long-term ground lease gives you all of the rights to be on the land that you would have as though you own the land. But it has a couple of key provisions in it that ensures that we're able to keep that home affordable long-term. Two of those terms are that you have to sell your home to somebody that meets the same income qualifications that you did when you bought the home, so another low-income family, and that you sell it to them for an affordable price according to the resale formula. So that when we develop an Atlanta Land Trust home, we're creating an affordable home that benefits multiple generations of families over time. So we're asking you as the Atlanta Land Trust homeowner to pass on the benefit that you received through getting an affordable home through the Atlanta Land Trust. The community land trust home can transfer upon heirs, transfer to your heirs upon death of the homeowner. I touched on this briefly. Similar to traditional home ownership, when you pass away, your heirs are able to receive your community land trust home if they are immediate family, meaning that they are a sibling, a spouse, or a child, or if they've lived in the home for 1 year or longer. If you're in a community land trust home and you decide to sell your home, you want to move on, we do have an option to purchase the home from you directly. We will not buy it at a discount. We'll buy it at the price according to the resale formula. But ideally, we will buy it and then be able to put another qualified buyer into the home immediately so that you don't have to go through the process of putting the home on the market and hiring a real estate agent to support you in selling it. You are required to have typical homeowners insurance and flood insurance, which Felicia touched on. You're generally prohibited from leasing your home. It is supposed to be your primary residence, meaning that you live there at least 8 out of 12 months of the year. But if you do have to move away from Atlanta for work or for school or for some sort of family situation, we will take that into consideration and allow for you to lease your home to another low-income renter for a limited basis. We want to make sure that you intend to come back to Atlanta and live in the home, and that while you're away, another low-income renter has the benefit of living there. As a community land trust homeowner, you are responsible for all of the typical costs that you would be as a traditional homeowner, including your property taxes, and I know Felicia reviewed that. That's something that you pay on a monthly basis to your mortgage servicer, and they then pay your property taxes on your behalf once a year. You're also responsible for utilities. And then an additional expense for a community land trust homeowner would be the monthly ground lease fee. So this fee has 2 different components to it. One is the land use fee, which is $35 a month, and that is the fee that you pay to us for being on the land, for being able to use the land. And the second fee is the repair reserve fee, and that's $20 a month. And that goes into a separate account that we manage, and you will have access to as the homeowner in the event you have any repair or maintenance issues with your home. So it's a total of $55 a month that you'll be paying to the Atlanta Land Trust. As far as qualifications are concerned, if you're interested in buying a home through the Atlanta Land Trust, generally your income cannot exceed 80% of the area median income, which is terminology that's used by the federal government to measure affordability. For Atlanta, if you're a single person, that means that you can't make more than $44,640. And then it's adjusted based on how many people in your household. And to be clear, this is not how many income earners in your household. This is how many people in your household. So if you're a single parent and you have 2 kids, you'd be looking at the income limit for a 3-person household. And again, this is a cap, so you can't make more than this, but you can definitely make less than this, and we will still be able to qualify you, even if you're making 50 or 60% of the area median income. You also will need to be employed, disabled, or a senior citizen on fixed income in order to qualify to get a mortgage, and need to have a minimum credit score of approximately 620. Ultimately, this is all determined by the mortgage underwriters. 620 would be kind of the bare minimum. You would have to otherwise be in very good shape financially. So you, in reality, need to have a score that's higher than that. But if it's lower than 620, you definitely won't be able to qualify. But what we can do is refer you to other organizations that can help you to repair your credit. As Rob mentioned, we use 2 resale formulas in order to ensure that the home remains affordable long-term. An appraisal-based formula, which allows for the homeowner to share in the appreciation of the home. So the homeowner's initial purchase price is increased over time by a specified percentage of the increased market value. And that market value is determined by an appraisal at the time of purchase and at the time of resale. So according to our appraisal-based formula, you'll be able to share in 25% of the appreciation that happens while you live in your home. We also use a fixed rate formula, and this fixed rate formula is specific to the homes that we have in the Pittsburgh neighborhood of Atlanta. And using this formula, the homeowner's affordable purchase prices increase over time by an annual percentage, and the annual percentage that we use is 2%. So if you stay in your home for 10 years, the value of your home is able to increase 20%. And that's how we calculate the price for which you are able to sell your home, and that establishes the maximum price for which you could sell your home. You may choose to sell it for less than that if you're trying to sell it faster, or if there are other circumstances. We have an example here of our resale formula in action. This is an actual unit that we sold in early 2019. The unit was initially placed into the Atlanta Land Trust in 2012. It was sold to an Atlanta police officer. He decided to sell his home 6 years later. So in 2018, he notified us that he was ready to sell. When he initially purchased the home, the market value, so this is what it would have appraised at, was $150,000. But we discounted that value to make it affordable for that police officer. So he really only paid about $50,000. And his mortgage was roughly $45,000. And that resulted in a monthly payment of about $500. When he decided to sell his home 6 years later, we went and got another appraisal to determine the new market value, which was $400,000. So in the time that he lived in his home, the unit appreciated $250,000, which is the difference between $400,000 and the initial estimated market value of $150,000. So according to the resale formula that we had on that unit, he was able to share in 25% of that appreciation, which was $62,500. We added that then to the reduced purchase price, which is the affordable purchase price that he was required to pay when he bought it, of $50,000, to come up with a new sales price of $112,000. Once he paid off his mortgage, he walked away with about $67,500 in equity. So this is a real life example of a resale that we've recently processed. I would say this homeowner was able to realize a higher amount of equity than a typical Atlanta Land Trust homeowner will be able to realize, just because his initial purchase price was significantly lower than what we have units priced at today, just because of how it was structured. But we use this to show that although you are restricted in how much you can sell your unit for, you still are able to realize a portion of equity. And next on the agenda is a review of our home buying process. So I know Felicia did talk through a typical home buying process. Ours has some similarities, but also some additional requirements because we want to make sure that if you're buying a home from the Atlanta Land Trust through the community land trust model, that you understand how that is different than traditional home ownership. So the first step in our process is always to attend a community information session. We hold those on a monthly basis and have a calendar of events on our website, which indicates when our next community information session will be held. We have one, I believe, coming up on, actually our next one has not been scheduled, but we do have an event coming up on May 2nd that will serve as an information session and provide an overview of a couple of listings that we have. So the first step is to attend that community information session. That will provide you with an overview of how this model works so that before you get further along in the process and have invested your own time, that you really do understand the model and have been able to determine that it's a good fit for you and what your goals are. You'll then determine your program eligibility by completing our electronic application, which we'll send to you. You submit income verifying documentation so we can make sure that your income doesn't exceed that income limit that we talked about earlier. And then we'll work with you to get a one-on-one counseling session scheduled with our housing counseling agency, which is RRC, Resources for Residents and Communities. And this one-on-one counseling session is unique to the Atlanta Land Trust. This counseling session will review the community land trust model and our ground lease specifically with particular focus on the resale formula, so we can make sure that you understand how that will be calculated at the point of resale. You'll also be required to complete homebuyer education and get mortgage pre-approval. So we do require that in addition to the one-on-one counseling, you take a homebuyer education class and get a certificate. This is a standard requirement for a lot of the down payment assistance programs that are used. So we don't require this to be duplicative. We just require that you complete one 8-hour class from anybody that has HUD certification. And SUMMECH is one of those approved organizations. You then also need to get a mortgage loan pre-approval letter from one of our approved lenders who we have listed later in the presentation. It's important that you get this pre-approval letter so that you know how much of a mortgage you can qualify for and how much of a home you can afford. And then you can select your home based on what you can afford. We'll enter into a contract, you'll review the terms of your ground lease, and then at closing, as I said before, you'll sign your ground lease and then be able to move into your home. Now, this process, I will say, it's not linear, so you can enter into the process at different points in time. We just want to make sure that you've done all of this before you put your home under contract so that you fully understand, again, how the model works. Next on the agenda is a review of our geographic area focus and some of our available properties. So again, we're really focused on the BeltLine corridor. We want to make sure that we're creating affordable homeownership opportunities in this corridor for both legacy residents as well as folks that are new to Atlanta. The BeltLine is an amazing amenity, and we want to make sure that people across the income spectrum are able to enjoy that as it's built across the city. Our work is really focused within 3 primary subareas. That includes subarea 10 on the west side and subareas 1 and 2 in southwest Atlanta. And then we also have 3 units within subarea 4 on the east side. Within subarea 2 is the Pittsburgh neighborhood. We currently have 5 homes listed within the Pittsburgh neighborhood, all of which are listed on our website. And as I mentioned earlier, we are planning a virtual open house to highlight our available properties within the Pittsburgh neighborhood on May 2nd, and that will be a Facebook Live event. So if you're interested in participating in that, you can follow us on Facebook, and we'll provide updates as they become available on that event. And we have 3 of those homes pictured here. They're all essentially new construction. We did have a small number of renovations that were included in the initial homes that were for sale in the neighborhood, but they were extensive renovations, so essentially new construction. We also have a partnership with the Georgia Trust for Historic Preservation, focused on the rehabilitation of historic homes in National Register historic districts on the west side of Atlanta. The two homes pictured here are currently on the market. One is in the Mosley Park neighborhood, just steps from Mosley Park, and the other is in the Washington Park neighborhood, immediately adjacent to the BeltLine West Side Trail. And we also, I'll mention, do have listings that are going to be coming available both in English Avenue and Vine City fairly soon. Next on the agenda is a review of our financial education requirements. Oh, sorry, we're going to skip that. I did touch on some of that with the one-on-one counseling with RRC and the typical home buyer education course. Those are our primary educational requirements. And if you have any questions about those, you can contact Karen or I. Next is an overview of the resources available to purchase an Atlanta Land Trust home. I quickly wanted to touch on the mortgage products that are available. They are slightly different than what would be available if you were buying a conventional home. Loan products are available through the government-sponsored entities of Fannie Mae and Freddie Mac. They provide conventional loans that are structured to support the community land trust model. We also work with lenders that have portfolio loans that they hold that have more flexibility. Housing finance agency loans are not currently an option, but something that may become an option through DCA in the future. And then lastly, VA loans. This could be an option. We haven't sold any homes that were purchased through VA loans, but this is an option. It will just require additional approvals from the VA in order for it to work for our program. And then we have 4 approved lenders that we're currently working with. They're listed here. We are working to add additional folks to this list, but everybody that's approved to work with us understand how to underwrite a community land trust home, understand our program requirements, have been through our training, and have agreed to provide these unique types of mortgages. So we've included their contact information if you want to reach out to understand what you could qualify for. And then there's also down payment assistance available, and Felicia did touch on this as well. Both Invest Atlanta and Atlanta Housing provide down payment assistance programs that can be layered in order to purchase an Atlanta Land Trust home. There are 2 options available through Invest Atlanta, their AHAP program and their IMAP program, which will provide you with between $10,000 and $14,000 of down payment assistance. It's important to understand that if you sell your property before a certain time frame, for AHAP it's 5 years and for IMAP it's 10 years, you will be required to repay a portion of the down payment assistance. And with IMAP, you'll have to repay a portion of the gain on the sale of the home. So if you are not planning on being in your home for very long, you may not want to pursue these programs because you will be required to repay it. If you stay in your home longer than the 5 or 10 year requirement, that repayment requirement is forgiven, and that becomes equity in your home. Atlanta Housing has a great down payment assistance program that provides between $20,000 and $25,000 towards down payment and closing costs. And their requirement is that if you sell your property before being in it for 10 years, you have to repay a portion of that loan plus a portion of the appreciation on the resale. And all of these programs require that, again, you attend that HUD certified homebuyer education class, you use a participating lender, and you find a home that's within the city of Atlanta. So all of those requirements align well with our program. I will tell you, you need to make sure whatever lender you're working with is comfortable and able to utilize both of these programs. So that's, to be honest with you, kind of changing on a daily basis at this point in time, just because of COVID-19. It's really dynamic right now in the mortgage lending environment. So just make sure that you bring that up when you reach out to a lender to understand what they have access to and what they'll be able to layer for you in order to get your purchase price as low as possible. And that concludes my presentation. So I'm happy to take any questions that have come through the chat box, Jen.
Sure. So we don't have any right now, but everyone please feel free to type those in, and they can be either for Amanda or Felicia. And as people are typing, we do, to go back to Felicia, had a question from before while people are gathering their questions for Amanda. There's a question on what do you do if you disagree with your appraisal, if you want to speak to
that. Generally, that's not something, you're not able to negotiate that. Your appraiser is an objective third party. What I have been able to do in the past, which I can share with you based on my personal experience, is give them feedback on the comp that they're using, and just ask questions about the adjustments that they're making, just to try and get a better understanding and maybe share information that you have with them. But they do have ethical guidelines that they have to follow, and so you are somewhat limited in being able to challenge them. And Felicia may have better information on that.
I agree with you as well as Amanda, and also it's an important key that most FHA appraisals run with the property. So if it was one done in a certain time frame, I'm not sure of that exact window, then it stays with that property. So even if you had an appraisal and the purchaser decide not to purchase, and then you make an offer and get an appraisal, that appraisal for most FHA type loans runs with that property, and your lender can give more information to their guidelines and acceptance of those.
Great, thank you both. We do have a question for you, Amanda. Do you have any townhome properties available?
So we don't currently have any townhome properties available, but we're working on a couple of projects that would include townhomes. So hopefully within the next couple of months, we'll be able to start marketing some of those. One is at a property that we own right now within the Oakland City neighborhood on Tucker Avenue. We have proposed the development of 23 units on that property, all home ownership, and it would be a combination of townhomes and condominiums. 5 of the units would be 3-bedroom townhomes. We're working through some challenges on the project right now, but we're still hopeful that we'll be able to deliver those townhomes on that site, and hope to be able to start construction by the end of the year.
Great, and again, I will include all the presenters' contact information if anyone has any questions that come up, or in this case, if you want to join the Atlanta Land Trust mailing list to keep up to date on the homes that they have available. And then Amanda, we have another question for you. What percentage of homeowners typically stay in the house for life versus successfully transition into full home ownership?
So I'm not sure I can directly answer that question, but what I can share is that community land trust homeowners on average stay in their home for 7 years. And when they sell, 58% go on to buy another home. So I would say it's a fairly high percentage of people that do make that transition. But there is certainly a portion of community land trust homeowners that choose to stay in their home permanently. And then maybe others who, for personal reasons, have to sell their home sooner than they anticipate.
Great. So that right now it's the last question. I'll give it just a few more moments if anyone is currently typing. But again, thank you to you, Amanda, Rob, for stepping in, and Felicia for sharing all that great information, and to everyone else for dealing with our technical glitches, which I'm sure is pretty standard these days in our current situation.
Yeah, I'm so sorry about that.
No problem at all. And again, this is Rob. I do want to thank everybody who took the time to learn about these opportunities. This is our first virtual offering of our home empowerment workshops. I sincerely hope that you all found it valuable. We are going to have the video available online. We do ask if you found it valuable when you get the follow-up email and such, if you can share that information with others. We do plan to continue offering these online until, well, even after we're able to start doing them again in person, to really try to make these resources as available as possible, because it is incredibly important to us that we're doing what we can to help connect residents in Beltline neighborhoods with the partners and the programs and the resources, so that everybody can live near the Beltline and benefit from the opportunities that it provides. So again, we hope you found this to be valuable, and if you did, sincerely hope that you will help to spread the word so we can reach as many folks as possible. And first and above everything else, please stay safe.